You heard there about the challenges. Let's just talk about the policy response, because the ECB has already signalled 25 basis points next month. Does that go far enough when we have countries within Europe like Spain printing inflation prints now in double digits?
Well, the answer is they've started too late. I think it's a simple problem that they've got. They should have just been reducing the QE so that it ended in Q1. Now they're in this position where they really need to get rates into positive territory as quickly as possible. So 50 basis points probably would be more appropriate. But what they haven't got in place properly as yet is this anti-fragmentation tool, and balancing the two. There are very conflicting interests there, trying to control inflation, and on the other hand, trying to ensure that bond yields, bond spreads within the Eurozone don't go a lot wider. So I think in the first instance, they probably want to go a little bit quicker. But after that, they really need to be a little cautious, like the Bank of England.
And it's just interesting because when it comes to this fragmentation tool that you've been talking about, no real clarity on exactly how it's going to work. And of course, the big question is whether or not it's going to be effective at all. Can you give us any insights on that?
Well, I think that what the ECB's gamble is at the moment is it's hoping the anti-fragmentation tool never has to be used, a bit like the OMT, i.e. they hope just the threat of it being there is enough to stop those spreads going wider. For the time being, that's working, but it really then depends on how quickly they want to raise rates, because the quicker they raise rates, the more pressure there is. And if you look at corporate credit spreads, it would seem to me that the market is saying, we don't think you're going to be able to pull this off very easily, even if it works in the first instance for government bond spreads. And it is for the ECB very important to address what they call financing conditions as opposed to financial conditions. And by that, they mean things like corporate credit spreads relative to underlying governments.